everyone for joining. I'm Heather Dyer. I'm the owner here at Dyer Appliance Repair Academy. Thank you for joining our Part 2 Town Hall on the COVID-19 and protecting your small business. We have an excellent panel tonight and 3 excellent speakers to share with you. So I will hand this over to our co-host, Scott McConnell from Lake Appliance Repair in Sacramento, California. Hi, Scott.
Hey, Heather. Thanks for that. Yeah, welcome to part 2 of the COVID-19 Town Hall. First of all, I wanted to just introduce our panel here. Ladies first, we've got Corrine Carusso, Solar Refrigeration and Appliance Service out of New Orleans and Jackson, Mississippi. And she is the current president of the United Appliance Services Association. Then we have Debbie Klintworth, D3S Service out of Houston, Texas, covering the eastern part of Texas, which is no small feat, I'm sure. Next we have on the lineup Mike Callahan. He's the owner of Callahan's Appliance Service, or Inc., sorry, Mike, and they're out of Prosper, Texas. Also the president of the Professional Services Association, the PSA. Next up we have Rob Mathews. He's Mr. Appliance out of Cleveland, Ohio, and I believe Akron. I just looked at his website earlier. Correct? Yeah, there you go. We have James Dolbeare, owner at AAA Appliance Service out of Chicago, Illinois, and he's a past president of the United Appliance Services Association. And then last but not least on the panel, we have Tiger Tom Kissane out of Tiger Mechanical out of Phoenix, Arizona, and he also has Tiger Coolbox trailer refrigeration. And on the call this week, we're going to be hearing from some experts in the financial world. We have Caroline Hansen. She's board certified in labor and employment law by the Texas Board of Legal Specialization. So welcome, Caroline. We have Joe Averett of Averett Financial. Joe is both a CPA and a CFA. He started Averett Financial, looks like back in about 2014. And his wife, I'm assuming, Sara Averett. And she is also part of the company there of Averett Financial. And she graduated from the University of Texas, so go Longhorns. So first of all, I wanted to throw it over to Caroline. She has a presentation she wanted to give us and give us just a little bit of education on how we can manage and manipulate our finances through this strange time where we've got a lot of money flowing around the country and a lot of confusion and chaos because nobody expected this. So welcome, Caroline, over to you.
Thanks, Scott. So what I was going to talk about today first was I was going to do a quick overview of the Families First Coronavirus Act and a little bit about what's in the CARES Act, but then I'm going to leave the financial questions and the tax questions to somebody who knows a little bit more about that than I do. I focus on employment law, so everything I'm going to talk about is from that angle. So hopefully by now everybody knows that this act was signed on March 18th. It went into effect April 1st. It only lasts through the end of this year, at least as of right now. I think that it's hard to say for sure what Congress might do if we do have a second wave, but for right now, it just goes through December 31st. It only applies to employers with fewer than 500 employees. I've had a lot of questions about why it is that Congress decided to do that. And the best thing I've heard is they hoped that the big companies would, quote, do the right thing. Not sure that's really happening, but that's the explanation. What it does is it does 2 major things for small businesses. It requires you to provide your employees with 2 weeks of paid sick leave, but only for very specific reasons related to the coronavirus, which we'll go over a little bit more in depth, and it expands the FMLA, which for a lot of employers who never had to deal with the FMLA because they didn't have 50 employees, this is kind of a new thing, because even if you have fewer than 50 employees now, this FMLA expansion applies to you. And then they provided a tax credit if you do have to pay out any of these benefits. And it's a tax credit that you'd work with your payroll company or whoever processes your payroll in order to take advantage of that. So the reasons, there are only 6 specific reasons why you can use the paid sick leave. And that is if you're subject to a COVID-19 stay at home local quarantine order. There's a lot of exceptions to that though. When this first came out, there was a lot of concern that all of a sudden everybody had to start paying their employees for this because a lot of states and localities were shut down due to stay-at-home orders. But as it turns out, when the Department of Labor came out with their clarifying regulations, this only applies if you have work for your employees and you have not closed down. So if you've closed or you've sent people home because you don't have work for them, it doesn't apply. Also, if you're an essential business, then it doesn't apply to you either in most circumstances. The other reasons are if you're advised by a healthcare provider to self-quarantine. And let me caution you, that is not any old person that you might want to go seek medical advice from. It has to be a doctor, a nurse practitioner, a physician's assistant, somebody who could actually diagnose you has to advise you to self-quarantine. Another reason is the employee is experiencing symptoms and seeking a diagnosis. And that's important because they have to actually be seeking a diagnosis. And it only accounts for the time when they are actively seeking a diagnosis. So the other reasons are if you're caring for somebody who is subject to self-quarantine or advice of a physician to quarantine, or if you're caring for a son or daughter whose school or daycare is closed down. The last reason, really, we have no idea what it means. Substantially similar conditions specified by Secretary of HHS. That has not been specified yet. Nobody knows what that's for, so you can kind of ignore that for right now. So what do you have to do if you have an employee that has this? First off, there are documentation requirements. So if you were ever to get audited for taking the payroll credits or the tax credits, you would need to have documentation. So make sure you get documentation about one of those 6 reasons. You only have to pay for 80 hours for full-time employees, and part-time employees, it's whatever their 2-week average is. So for reasons 1 through 3 on the last slide, those are the self-care reasons, or if it's something for yourself, you pay up to $511 a day. It's just the employee's regular rate, but it's capped. And then if they're caring for another, it's only at 2/3 of the employee's rate. And that's again capped at $200 a day. The FMLA expansion, that is only if somebody is home caring for a child who has a school closed, daycare centers closed, the nanny can't work because of COVID-19. Originally the act said if it's to care for a son or daughter who's under 18 years of age. When the IRS came out with their clarifying regulations, they said that you need to have the employee certify that if your child is over the age of 14, that there's some special circumstance that requires you to be home during daylight hours to care for them. So the way you document that is you simply get the employee to certify in your documentation that there is a special circumstance, but you don't need to dig into it. And the payment for that FMLA expansion is just for 10 weeks. And it's capped at 2/3 of their regular pay. You can make if they have PTO, you can make that run concurrently. There is a small business exception to the sick leave and the FMLA, but it only applies in a very limited circumstance. So let's talk about that for a minute. It applies to small businesses with fewer than 50 employees, and it only applies to the leave to care for a child. So even if you think this exception applies to you, It's only in situations if the leave is to care for a child, not if the employee is diagnosed with COVID or is self-quarantining. And then there's 3 important things that you have to be able to verify. One is that providing this leave causes the business essentially to cease operating. You have to have an officer of the business believe that that would be the case, or the absence of the employee would cause a financial hardship on the business because of either the specialized skill that that employee brings, or their knowledge or their responsibilities, or there aren't sufficient workers that will be available to perform the services if you let this employee have the time off. You don't need to apply for this exception through the Department of Labor. You would just need to keep documentation of the reasons that you think that you're exempt from this. That way, if you did have an employee file a complaint with the Department of Labor, you'd be ready to explain to the Department of Labor why it is you think you're exempt. Briefly, the CARES Act is something else I get a lot of questions about from my employer clients. Briefly, what that did was it expanded unemployment benefits. It means that whatever your state maximum was, employees can get an extra $600 for up to 16 weeks, and that's funded by the federal government. In Texas, for example, what that means is that the state maximum was, I think, $521 a week. If an employee is eligible for the state maximum, they would get $521 plus $600 for 16 weeks. So for some employees, that's a lot more money than they were making in certain situations. For some, it's about what they were making. The other thing the CARES Act did with regard to unemployment is it expanded unemployment for business owners and 1099 independent contractors, which in the past are categories of people that would not be eligible to get unemployment benefits, but right now you can, in theory. I say in theory because at least in Texas, we're hearing a lot of complaints about 1099 individuals and their benefits being held up. So I'm not sure how that's working. It actually, if it's working, but in theory, you're supposed to be able to get unemployment benefits if you were 1099 or a business owner. The other thing it did was it specified that individuals were going to get payments of $1,200 per individual filer up to a certain income level plus $500 per child. And then it allowed for EIDL loans, which were grants up to $10,000, emergency grants up to $10,000 that were supposed to be, if you applied for it, you were supposed to get it really fast. I think I've heard of one business locally who's actually gotten one of these really quick $10,000 loans. Also, the SBA changed that to limit it to $1,000 per employee as opposed to just $10,000. And then there are also emergency grants if you can show the SBA that your income has gone down drastically. There's additional grants beyond that $10,000 that you're supposed to be able to get. And then the one that we get lots and lots of questions about, and I think somebody else is going to speak more in depth about applying for this, but the Payroll Protection Act, or the PPP, you could apply for 2.5 times your average monthly payroll, and it's forgivable if used to pay for payroll and your head count is not decreased. And so I'm going to talk about that for just a minute because I get a lot of questions from my employer clients about that. So the forgiveness for the PPP is you can get up to the entire amount forgiven if you use it in certain ways. You have to use it 75% for payroll costs, and payroll costs include salaries. They include what you pay for 401k or retirement benefits for your employees. It includes health benefits. It does not include your employer's share of taxes, though, for the federal government. If you're paying state taxes and local taxes, then it would include that. And then you can use up to 25% of it for rent and utilities or mortgage interest, that kind of thing. The amount forgiven is going to be reduced by the percentage that you reduce your staff while you have the loan. So day one, let's say you get your loan funded on April 15th. You have 8 weeks from April 15th to spend that money. So what's going to happen at the end of that is a really good question. According to some bankers I've talked to, we're still waiting on the SBA to come out with the process to get that forgiven. But what we believe it's going to look like is something similar to how you got the loan in the first place. So you'll sit down with your banker, you'll show your payroll reports for that 8-week period. You'll prove what you paid for salaries, benefits. You'll prove what you paid for rent. And you're going to have to prove what your employee headcount was during that time period. And if you reduced headcount during those 8 weeks, then your loan is going to be reduced proportionally. And the statute itself gives this formula that I have on the screen here, but they're basically going to look at your full-time equivalent employees, and full-time equivalent means 30 hours or more a week. They're going to look at those employees over the 8-week period that the loan was in effect, divided by the average number of full-time employees you had from February 15th of 2019 to June 30 of 2019. So looking at a year ago, or, and this is supposed to be the employer's option, or that time period of January 1, 2020 through June 30 of 2020. So that is what we know so far about the PPP forgiveness. I do know several other things about it if anyone has questions, but I know we have some tax professionals here that would probably be able to answer those questions as well. So with that, I'll turn it back over, Scott.
Okay, thanks a lot, Caroline. We did get one question come through while you were speaking. The 50 employee thing, is that 50 employees total, or is it 50 employees within a 75-mile radius? Is there any, and that may be a state-to-state thing.
It's 50 employees total. So the FMLA does have that 50 employees over a 75-mile radius in order to determine whether you have to comply with the FMLA in general. This 50 employee exemption for small employers doesn't have that same thing built into it. It's just 50 employees.
Oh, cool. Okay, thanks for that clarification. All right, so we're going to turn it over to the panel. Actually, jumping the gun there. We're going to turn this over right now to Joe and Sara to have a little chat and give us some of their wisdom on the tax implications here of all of this stuff that's going on. So Joe, Sara, you want to take the mic?
Yeah, sure. Thank you for the summary, Caroline. Besides the PPP, we're getting most of our questions about PPP, obviously. Early on, the last 3 weeks has all been about the PPP, and Sara's going to discuss a little bit about that in a minute. But recently, we've got a lot of questions about the $1,200 stimulus payment that individuals are going to be getting, and a lot of people are not getting those checks, or they haven't filed their 2019 tax return, and but they filed their 2018 tax return. So there's just been we're getting a lot of calls because people don't know what to expect. Okay, so one of the things is they don't have the same bank account as they had in 2018. Well, if that's going to be the case, the IRS will try to send a direct deposit to them, and the bank is going to reject it if they don't have the account anymore. So in that case, the taxpayer is going to get a check in the mail at some point. We haven't heard of any checks going out yet. So we don't know when their checks are going to be sent out either. But we do know that the payments are going to be $1,200 per individual, and then $500 for dependents on the tax return. And it's going to be based on the income that they had in 2019. But if they haven't filed their tax return for 2019, then it will be based on 2018. But really, this credit, it is an advanced credit on their 2020 tax return. So let's just say they made too much money in 2019 or 2018, so they didn't qualify for the credit, because it does get phased out for an individual person, it gets phased out at 75,000. And when their income gets up to about 100,000, they don't qualify for the credit anymore. A married filing jointly, it's 150,000. And then by the time their income goes up to 200,000, they don't qualify for it anymore. But it's really an advanced credit for 2020. So if they get to 2020 and they didn't qualify for 2019, but in 2020 their income is lower, they will get that credit on their 2020 tax return. So they're probably going to get the credit then. Now, let's just say in 2019 they qualify for the credit. They get all of it. They get $2,400 or $2,900 or whatever the credit is. Then they get to 2020, their tax return, their income is too high. Fortunately, let's just say they're blessed that they don't qualify for 2020. They're not going to have to pay that back. It's not going to be income to them at all. So those are some of the questions that we're getting about the stimulus checks that are going out. Another thing that might be helpful for some of you guys if you're struggling and need to take money out of your 401k, under this CARES Act, there's not going to be a 10% penalty on money that comes out of the 401k or your IRA, up to $100,000 of that you can take out. Normally, when you take money out of an IRA, you have to pay taxes on that lump sum. So let's just say you take out $100,000. Well, that's going to be added to your taxable income in the year that you take it out. But not in this case. The IRS has allowed you to spread that $100,000 over the next 3 years. And so if you take out $100,000, you can spread it out $33,000 per year. You're going to pay taxes on that. And so that would help you maybe not go into the next tax bracket and pay higher taxes on that. They will allow you to pay it back within 3 years as well. So you've got the money later on within 3 years, you can pay it back and there's not going to be any taxes on that. So there's a couple of ideas, some of the major questions. I'll turn it over to Sara to talk about more of the details with the PPP.
Thank you. Right. So Caroline actually covered a lot of detail about the PPP program. But I'll just add a few other elements. So it stands for Paycheck Protection Program, and the intent is to help your business continue to employ your employees. That's the whole intent. $350 billion was initially approved by Congress, and that, as you have heard on the news, that money has all been spent and provided. Just today, late in this afternoon, that Congress approved an additional $320 billion. So they've opened up round 2. So what I think is going to happen now is people who've previously submitted applications, those will be considered first, I would imagine. But if you have not submitted an application at this point, I highly recommend that you go ahead and go through the process, because at least you have the opportunity to receive the funds, as we're clearly, if you don't submit your application, then that it won't even be a possibility. So let me just cover a little bit of the mechanics of the PPP loan itself. So just like Caroline said, it's based on your average monthly payroll, and the way they calculate that is look at your prior 12-month history of payroll. And when I say payroll, I just mean W-2 wages. It's not contract labor payments or anything like that. It's just your W-2 wages. So you take your most recent 12 months history, divide by 12, and then multiply by 2.5. And that is your loan amount that would be given to you if approved by the SBA. Now, Caroline also covered what that's intended to be spent on, which is payroll, rent, utilities, and then mortgage interest as well. And then there are some nuances. At least 75% of it has to go to payroll, and then you can use the remainder on those other pieces. All right, so the big idea is that you could get most of your loan forgiven by using it in those things that I just mentioned. And also, I can echo what Caroline said, that we don't know for sure yet exactly how that forgiveness process is going to work. I did read that SBA should give us more guidance as early as April 26th. So that's just a few days away that we should learn more about those pieces. And also, again, you would work with your bank on that part. But let's just say that you haven't applied yet. How do you get started? So the very first thing to do is to contact your bank and let them know that you're interested in applying for the PPP loan. And the bank will provide you probably with, excuse me, let me restate. The bank will provide you with a list of documents that they require, as well as the application. The application is standard from the SBA. It's not specific to your bank, but nonetheless, you'll have to complete the application. If you'd like to take a look at the application and not contact your bank, just Google PPP loan application and you'll get a copy through Google. So let's say you decide to move forward, then you would calculate the loan request just as I described. It would be your prior 12 month of W-2 wages. You would need to subtract anybody's wages over 100,000 from that total. And then you get your number, divide by 12, and then multiply by 2.5, and that is your loan request amount. Your bank, every bank is different in what they're asking for you to provide as support for your loan. But the common things we're seeing are that they want to see your prior 4 quarters of 941s, probably your annual 940. I've had some banks ask for W-2s for each of the employees that you have represented in your payroll records. I've had another bank that asked for very detailed payroll records of every paycheck for every employee for the entire 12-month history. They haven't all asked for it at that level, but some do. It's common that they're asking for your entity's prior year tax return. If 2019 is complete, they would accept that, and if not, they would accept 2018. So those are the mechanics of it. If you have not applied at this point, like I mentioned, talk to your bank first. I've also seen some other places that are offering the PPP loan. Like for example, we have a lot of clients who use QuickBooks. And then also within that, we have clients who use the payroll subscription within QuickBooks. So QuickBooks is specifically offering loans to their payroll subscribers. So that might be an option for you if you use QuickBooks. I heard a client today say that they got an offer from Square because they accept Square payments. So I highly recommend that you pursue this with whichever contact that you have. It's very, our understanding is that each bank is allotted a certain amount of money, and then once they run out of that money, then that's it. So that's, one last piece to cover are the terms of the loan. It's a 2-year loan with a 1% interest and a 6-month deferral on your first payment that's due. So hopefully all of it would be forgiven, but if not, it is another way to access cash that you might choose to spend in another way. You just would then have to pay your bank back. So those are all the comments that I had prepared, but I'll be happy to answer questions when we reach that phase of the program.
Cool. Well, thanks a lot, Joe and Sarah. That was good. We are getting some questions. So before we go to those, we will go to our panel. Corrine Carusso, would you like to kick us off, please? You had a question or two out there. You're on mute, by the way. There you go.
Am I unmuted now?
Now we can hear you. Yep.
My biggest question is on the number of full-time employees. Is that the number of full-time employees at the end of the period, or is it the average number of employees during that 6-week or 8-week period that you're trying to get everybody back to work?
So there's if you look at the regulation, there's a pretty thorough explanation of that, but basically they're going to look at the average number of full-time equivalent employees that you have over that 8-week period. And they're going to divide it, like I showed on the slide, over one of those 2 periods. So, but the statute also says that if you have laid off employees or you have employees leave, you're supposed to be able to bring them back before June 30th. And that is one unknown that we don't have yet because that forgiveness process isn't really outlined. So in theory, you're supposed to be able to bring people back and fix that headcount issue. We just don't have a lot of clarity on how they're going to look at that.
Okay. I was just wondering if, say, it took me, 6 weeks to get back, 4 extra employees, if I were going to be, if I'm successful in getting a PPP loan, if I'm going to be adversely affected because it took me that long to either get those people back and and or rehire people to put in their place?
I can answer a little bit of that. So the way that that might impact you is that, let's just say your average payroll, I don't know, let's just pick a number, it was $10,000. So then when you multiply that by 2.5, that's 25,000. So they're letting you have a 10-week period to set your loan amount, but then you have 8 weeks to use it. You see what I'm saying?
Right.
So if your typical payroll is only 10,000 per month, but now you have 25,000, you know, they intend for you to use that excess on your rent and the other things that they allow. But in this situation, let's just say your employee or a number of employees left, so you're not actually spending that money on payroll like you normally would. So that is going to be a factor.
Yeah. My next question, if I could have one more, is on the number of applications that a business can make through different entities. I mean, initially we made one application. We still have not been successful, but I mean, to date, we probably have 5 or 6 applications in, and, you know, we still haven't heard anything. So I'm just wondering, you know, I've read some of the verbiage on the contract or the application says that you haven't applied anywhere else, but I'm seeing all over the place that people have applied, and it's kind of like whoever gets through the gate first.
You know, I'm not sure if the word on the form is that you've applied somewhere or that you've received funds from somewhere. So I can say with certainty that you cannot accept funds from 2 different banks, but I think it's okay to apply in more than one place.
Okay. All right, that's what I have.
Thanks, Corrine.
Can I follow up with your question about with the payroll example? Let's just say that you're
Yeah.
not able to use all the funds on payroll. Well, at that point, you have a choice. You can either return the funds to the bank or keep it and then pay the loan terms, right? The 1% interest.
Right.
Right. So it's just something to consider for cash flow planning.
Yeah, which is some pretty cheap money, which is
It is very,
good.
very.
Yeah. All right, thanks, Corrine. Next, I was going to go over to you, Debbie Klintworth. You had a couple good questions that you submitted earlier.
Yes. I'm feeling like most of us, we haven't shut down. We're still working. We're bringing in money. I'm fearful that eventually someone's going to be penalized if we take the money, we do use it the way they wanted us to, and then when we do our taxes, it shows that we didn't need the money. I feel a little guilty. I want to be ethical. I don't know what's going to happen in a month or 2 or even 4 months from now. So of course we've all applied. If I get it, will I be penalized in the future? Has anyone thought that through? Because they only have so much money and there's so much need.
Well, as far as the taxes, it seems pretty clear that when it's forgiven, that this is not going to be included in income. It's not taxable income to you. And the expenses that you use to pay for payroll, those will be tax deductions. So I think we're all maybe a little bit worried about getting all this free money from the government. And now they're going to have their hands in our pockets and own part of our business. But I don't think that's going to be the case at all. I think the intent is they got all this money out there and they want people to use it, to spend it, so it can jumpstart the economy again with this money.
Okay. And I have one more question related to employees. Oh, I have one employee that actually quit on the 11th of March, just walked out. And now he is getting $975 a week, which he's told the whole entire staff. And he's getting unemployment plus the additional $600, I guess. And I can't compete with that as an employer, and I can't keep any of my staff if this is going to continue. So I'm just kind of wondering, how do I handle it? Because they can claim all of them have children. Everybody's kids are home from school. You know, everybody has a parent that they're, you know, taking care of. So I'm getting to that. It's scary.
Yeah.
For all of us, because if we don't have our team, we don't have a company.
So when this person that walked out, applied for unemployment, did you report to TW? You're in Prosper, right?
No, I'm in Houston.
You're in Houston. So did you report to TWC that this person walked out and quit?
Yes, and they've still submitted. So I'm in the process of going through that whole process. So
Okay, so good. I have heard that a lot, that people are automatically getting approved and then you're having to go back and fight over it. So that is difficult. I don't have a perfect response to that, except that I can say that you do need to have the employees provide documentation of the school that's closed. I can share a very simple form with you that you should be having your employees fill out. But they need to say what school is closed or what daycare center is closed. And unfortunately, that is, you know, we can't fight that, unfortunately. But with regard to just saying, oh, well, I have to care for my sick grandparent who is at higher level for exposure, well, that's not actually a reason that they get to stay home. That's not one of those 6 reasons under the FFCRA. If, though, an employee loses their job because they're staying home to care for a child who is out of school, yeah, they're going to get that unemployment. And the good news is it doesn't last forever. It runs out. Once the government funds run out, which was supposed to be 4 months, then they're not going to get that extra $600 anymore. They're going to be back to that minimum that Texas pays for unemployment. Also, if you have work for an employee who says that, let's say you furloughed employees and sent them home because you didn't have work for them to do. What was that, Debbie? Oh, you're muted.
that's because my dog is tearing up the screen and I was yelling at my husband to stop it. I apologize.
That's okay. That's okay. Once you have work for your employees to do, they don't get to just say that they don't want to come back to work because they don't feel safe. If they do that, then they're not supposed to be getting unemployment either. Of course, you do have to report that to TWC if you want them to stop getting unemployment. I was on a webinar today that TWC put on, and they encouraged employers to call the fraud hotline or to send an email to the fraud division if that did happen.
Thank you very much.
Sure.
All right. Thanks a lot, Debbie. Did you have any other questions there? Nope. Okay. All right. So next up on the lineup, we're going to go to James Dolbeare out of Chicago. James.
Hey, how are you?
Good.
We've had multiple questions from kind of piggyback off what Corrine was talking about with the multiple applications. You hear two things. You hear from banks saying, don't apply multiple ways because it'll confuse the SBA with your federal ID number. And then sort of behind the scenes, they say, apply to multiple banks. I've heard both. So there's a lot of confusion on that. Joe?
I agree. Yeah, I agree. There is confusion, and unfortunately, there is no clarity, and you just have to go with what you think is the best way to handle it. Because like, for example, one of our clients banks with Wells Fargo, and we've heard that Wells Fargo just chose to use their biggest clients, and they just did a few loans and then used up all their money very quickly. So I would not advise a client, like, I'm so sorry you use Wells Fargo, that's it for you. I would encourage them, go use a different source that you have, because it's not their fault that Wells Fargo chose that strategy of how to use their funds. You know, I don't blame Wells Fargo for what they did, but I wouldn't want to penalize all the rest of their clients and, you know, not have access to funds if they do a different way. So I understand both ways. And you just have to go with what you think and take your chance.
Caroline, did you have anything that you could add to that, that you're hearing?
I don't. I haven't heard of people applying to multiple loans and it being a problem.
Okay, yeah, which is we're hear multiple things, and a lot of people wind up being frozen in one place, not able to make a decision one way or the other, because they're afraid to proceed, hoping that they don't mess it up. And then they try to proceed this way, but there's no guidelines. There's no rails for this. I think one of the questions we also had is, can an employer require somebody to stay out of work? My understanding is that some people are actually having them check in. So if somebody doesn't feel comfortable working and they feel unsafe, I would consider that a self-imposed furlough. They could stay home. I wouldn't advise somebody forcing somebody into a hostile situation. As you would in any situation, you wouldn't want any of the guys or gals out there in the field working in a hostile environment. We understand this, but that's self-imposed. It's, you know, I talked about this earlier, like my girlfriend or my girlfriend at work, somebody might have been exposed is not an excuse. And so it gets a little clarifying. But I think a lot of people are also taking temperature checks. We do a lot of medical work, and every hospital, every laboratory that I've been going into for, gosh, I'd say 8 weeks now, right at the entrance, they check your temp. Now we're seeing that at all buildings, they're checking your temp. So I think customers, oddly enough, are becoming accustomed to that kind of thing. So they're used to seeing us use PPE where it didn't used to be a thing. I mean, I've used nitrile gloves all my life. They always looked at me like I was strange, but I'm not so strange anymore. I was like, oh, that's the normal guy. Because I always knew what the bacteria levels were around washers and dryers. It's just awful. If anybody paid any attention to it, they'd be grossed out. But you might want to also impose something where you check their temperature at work. Are you good to go? Check your temp, get a report from the staff member because they're working remotely. Are you good to go? Are you okay? And if you are sick, you feel sick, or you don't clear your temperature test, stay home. Don't expose yourself to anything like that. And then some people, I think, are being liberal. Some people will pay for it, they'll cover it. Some people won't. It depends. I think the whole intent for most of this legislation is that we all want to do the right thing. We want to help our employees. We want to keep our customers safe, and we want to do the right thing for the nation. It's just kind of a shame that we always have a few bad actors that like to muddy the waters and take black and white and turn it into gray.
Yeah, and I'll tell you, I have clients that are sort of all over the place with regard to whether they're paying employees to stay home if they don't feel safe, or whether they're just saying, okay, well, you go ahead and stay home, but we're not going to pay you while you stay home. And then I've got some employers that are essential, and they can't get enough people to come to work to run the business. And in that situation, they are not being tolerant of employees not coming, and they're not keeping their job open for them. So you have to kind of look at the needs of your business and what's right for your business, and what you feel right doing.
That makes sense. Even though many of us are below the 50 mark, always felt that if it's 500 and less, let's do the right thing. Let's just step up and not look for exclusions or reasons to not do the right thing. But then again, you also want to not be taken advantage of, because you have responsibilities to the people that are working for you,
Right.
and showing up every day.
Yeah. All right. Well, thanks for those, James. That was really really probing there. Next, I think we're going to go over to Rob Mathews, Mr. Appliance. I'm going to throw this microphone your way.
Oh, thank you. Thank you all for joining. I've got two questions. One, the EIDL that was supposed to be 3 days that has not seemed to hit many bank accounts. If you haven't received that, should you try to reapply for that, or should you worry about that? And if you receive the PPP, what effect will it have on that?
Right, so I also have not seen many clients receive the EIDL funds. In fact, I only have one, and it was $9,000, which I wondered why it was not the $10,000 as promised. But I have other clients who have applied for it that haven't received it. So I don't know the rhyme or reason of how the SBA is choosing who to grant that to and who not to, because you don't have to provide financial information with that request. So I really can't answer the rhyme or reason. I think the second half of your question was, oh, you had said, if you haven't received that money, should you reapply? I think it's like the PPP in that there was a certain amount of designated funds. And there hasn't been as much information available about the EIDL as there is the PPP, but I also learned today that they granted an additional $60 billion to go towards the EIDL specifically. So again, kind of like earlier, if you think that's a good idea to apply again, I don't know why not, because there's no way for you to ask them, can you please confirm you received my request? So I think you're gonna have to just use your best judgment on that. And then the last piece of your question was, how, if you receive the PPP funds, how does the EIDL work with it? Well, on the PPP loan application form, when you have your loan request amount, you're supposed to put that and any EIDL funds that you received that as your loan request amount. So I thought that the 10,000 was supposed to just pretty much be a grant that you didn't have to pay back. But the fact that they're asking you to add it into your loan request amount implies that you have to pay that back. So I'm not clear. And I hate that we keep saying that, but it's just, they're giving us little pieces, you know, every few days, and we just don't have the whole picture yet.
Oh, cool. Thank you. Thank you for that. The second question is probably a little bit to do with the CARES Act. If you have a 2 household income and you have the husband, the wife, or the 2 spouses working, and they have an issue with childcare, how do they decide who stays home with the child? How do they make the decision? If a company wants to bully one to say, let your spouse stay home? And then also, can each of those people, each of the persons, the spouses, take 10 weeks each?
So if you're working for the same employer, it would work just like your employer would be able to question you a little bit differently, and you can talk to the employees and make sure that they're not both using it at the same time. The normal FMLA, if you were going to take it for the birth of a child, for example, then you would just have it for one employee, not for both. But if you're working at 2 separate companies, what they encourage you to do is, first off, yes, both parents can take 10 weeks off, but what you should do is talk to your employee. You're encouraged to talk to your employee under these regulations about whether there's someone else to care for the child. And part of that documentation I was mentioning earlier is your employee has to sign saying that there's no one else to care for the child. So, you know, are they going to lie to you? I really hope not, but it is possible. If you get wind that both parents are staying home at the same time, then you would want to use that as a disciplinary action and talk to the employee about that. But that's about the best I could do for you on that one.
Okay. Yeah, I was just curious because it came up that one of my employees actually stayed at home with their daughter because she was sick, so no one could go away. But his wife was going to stay at home, but her employer kind of bullied her into saying, you should come to work. And I talked to my employee and said, listen, I don't have a problem with this. You should take care of your children, but you should also work it out that maybe you guys take turns or go back and forth if this happens.
And that's what the Department of Labor in its regulations encourages employers to work with their employees like you're doing and try to come to some sort of resolution. And you can use those 10 weeks intermittently. So if you had 2 parents working at 2 different locations, you could try to work that out with your employee and say, hey, what if I gave you 2 days a week and your spouse used 3 days a week, or vice versa? You can try to work something like that out with your employees.
Thank you.
Mm-hmm.
Cool. That's it, Rob? All right. Awesome. Next, I think we'll throw it over to Mike Callahan. What you got for us, Mike?
Hi, everybody. Thanks for all showing up. We're talking a lot of money. Where is this all money coming from?
The government. The government's funding it. Yeah. If you know a lot about economics and fiscal spending and all that, it's just increasing the national debt.
They're
Sooner
printing money.
or later, they'll get it back. So I have an SBA loan. Actually, I didn't realize it was an SBA loan, line of credit. And I didn't get the IDL loan at 10,000. And I heard that there is also, that's actually supposed to be the precursor, and they'll offer you another loan after that. What exactly is the difference between the PPA, the SBA loan? How is that going to affect things that I have an SBA loan already?
If you currently have an SBA loan that is not the PPP loan, that loan is still intact, just like it was before all of this. But I believe that you can apply for some concessions, like defer some payments or potentially lower your interest rate. But the way that I've read that they're going to handle that on a case-by-case basis. They're not going to just do a wide sweeping, oh, all SBA loans are now, you know, XYZ, whichever. So it's, you would need to talk to your lender that holds that SBA loan right now and work with them specifically to ask for the concessions.
Okay. Yeah, I think that's about all I have. Thank you.
All right, thanks, Mike. And finally, we've got Tom Kissane. I'm going to throw the microphone your way. What you got, mate?
Yeah, two questions. Regarding the PPP loan, it's only for payroll, utilities, benefits, and rent. Are there any additional expenses that we can, if we get the money, can we use that for? Can we use it for leases on equipment, vehicles, insurance on the vehicles?
You can use it for leases. That's correct. But not insurance.
What about financing of vehicles?
I doubt it.
Doubt it, okay.
They specifically said mortgage interest. They haven't said equipment finance interest. So that's what leads, that's why I'm answering, I doubt it.
Okay. Other thing is that we have, when this went down, we start separating all the employees out. We sent a few employees home. They're working from home. One is not working out. She seems to be, or that employee seems to be lost their brain sometimes. And we want to bring her back to the office. And she's an integral part of the business to make things run smoothly. Head CSR. What do you think?
So I think that that is probably a performance issue. So if you want to tell her, hey, you're not working out from home, it's, you know, it's not working out to have you from home, we need to bring you back to the office. You can do that as an employer. That's your choice. And as an essential business, you can tell her that. What you need to keep your ears open for is if she says something like, well, I have an underlying medical condition, autoimmune disorder, for example, that means that I need to be self-quarantined, and then she gives you a doctor's note that says that, then you need to think about it in the context of the ADA and whether sounds to me like she'd be asking for an accommodation at that point. So that'd be the only thing I'd keep my ears open for, is an accommodation request under the ADA.
Okay, that's it pretty much.
That's all you've got. I had one question that just popped into my head as we were talking. If we got the PPP loan, kind of to piggyback off Debbie's question, is could we then, you know, typically we would use it through payroll and pay people what they deserve. But say, because we've been working through this time, we didn't actually need the money. Could we then use it as bonus money for employees? Can we give it to them in the bonus form? You're on mute. Click, click.
Yes, let me try again. Yes, bonuses are included in the wages that you pay.
Oh, awesome.
So you can, but I would also say, if you don't know how the rest of your year is going to turn out, it's okay to use the money to pay payroll right now and then wait until later in the year. You don't have to pay the bonus during that 8-week period just because you feel guilty or feel like you need to use up the money in total. So just something to think about for cash flow planning. Does that make sense? You see what I'm saying?
Yeah. Definitely. You definitely don't want to run out of cash flow and 6, 12,
Unless you
12
want
months.
to use it, unless you want to use it for the loan forgiveness or need to.
Right.
Okay.
Yeah, that's true. There's different ways to look at the question that you asked. Joe's right about that. So if you need to pay some additional pay so that you can ensure the whole thing is forgiven, then yes, that would be a way to do it. Where you might run into some trouble is if you have people, no, never mind. I was thinking there's a clause that says if someone makes more than $100,000, there's some little nuances there, but I don't think that that would impact the forgiveness part, so never mind.
Hey,
Okay.
you know what I would say too on that is that if you have calculated your PPP loan correctly, then you're actually spending that money in your in that same time period. And if your banker's going to say to me, show me your payroll reports, prove to me what you paid on payroll and rent over this 8-week period, you should be able to show him that. And he's not going to say necessarily which pot did you take this cash from. And so you can preserve cash flow that way.
True.
Nice. Mike, you had a question?
Yeah, so, and I actually had this conversation with my accountant, and some of the bigger companies that took the money and laid people off are using it and handing it out for bonuses, and they're looking at it as cheap money as a loan. They're not going to be penalized for it. They haven't really done anything wrong by using that and keeping it as a loan, but they're not keeping their employees on. They'll either hire new ones later on as they grow it back or whatever, which is kind of crappy for what it did for all the small companies that need it.
Right. So it's,
I wanted to add one thing also. Tom had mentioned about the insurance. The part of this is medical insurance. They do count that as part of the payroll. So don't think that that's not counted as a payroll issue. It is.
And retirement benefits like 401k matching.
okay. So the money can be used for all of that stuff.
And if you pay vehicle stipends, you know, other things like that, all of that could be included. But that would be part of your 12 months history that helped you calculate the amount. So it was just your normal payroll,
Yeah.
excluding the federal part that your employer taxes. It excludes that.
Okay, great, thanks. So it's just about rolled over 6 o'clock here in California. We did get a bunch of questions come through, so I wanted to get to those before we wrap this up. So we might take another 10 or 15 minutes if that's okay with you guys. Bit of a shameless promotion here. Just wanted to plug the United Appliance Services Association are doing a happy hour next Tuesday, April 28th, 7 p.m. Eastern. And that's going to be a little less formal, I guess you could say. It's a happy hour. Bring a cocktail and bring as many questions as you can, and that will be moderated by the great Dean Landers. So that should be interesting. Tuesday of next week.
Scott, can you put a link for that in the chat when you get a second?
Yeah, I probably can't, but I'm sure Heather could. She's the technical wizard here. But yeah, we'll get that link. We'll get it over there. So let's go to the Q&A. What questions do we have?
Can I ask one more question before we go to that?
Absolutely.
The unemployment rate or percentage rate that we pay has to go up as we are paying that out. So who's actually paying for all of that? If we lose people that are going to go on to unemployment, like this gentleman who walked out, does that mean that mine increases?
So the webinar that I was on with the TWC today, they said that people's rates are not going up because of claims that are related to COVID-19. Now, what are they going to do with your gentleman who you're fighting over because he walked out? That I don't know how they're going to segregate that exactly, but in theory, if it wasn't due to COVID-19, it would still impact your rate. But then the lawyer from the TWC said something interesting, which was somebody has to pay for this at the end of all this. So when we go to recalculate rates next year, we might reset. So while you might not individually get penalized on your tax rate, they might reset everyone's tax rate. So I suspect that's what's going to happen, but Joe and you guys might have something different to say about that.
I haven't read anything official, just all speculation, just like what you said. Like, yes, it's gonna have to come back somewhere, and I don't know if it's gonna go to the specific employers or just an overall rate increase. It seems like
Okay.
it, because I mean, there's so many people impacted. The
Sure.
only time to tell for sure.
Okay, thank you.
All right. So we did get some questions come through. We got one from Jeff Olson. Had an employee got sick, self-quarantined before the official stay-at-home orders, and all these programs came out. So I'm assuming maybe January or February. The tech applied for unemployment, requesting a leave of absence due to the COVID-19 issue and being at risk. This was before the PPP program came out. So now payroll went down the last 4 weeks, and how he's wondering how he would roll this situation into being able to utilize the funding program.
I think that's got a couple of facets to it. It sounds like, I'm assuming he hasn't applied and is considering applying. And it sounds like in his last 4 weeks, he hasn't had this payroll to pay. So how would that, how can he get a loan if he hasn't paid? So the 12-month period that you use is kind of a floating 12 months. That might not be the best way to say it, but a lot of banks were asking for the year of 2019. But in our case, like, we've grown a lot, our company has, so we wanted to use a more recent set of 12 months. So we provided it up through the year ending March 31st. So it's, and I had clients do it both ways, and the bank seemed to accept it. So I would say for that gentleman, just use a different set of 12 months. So you don't have to use the most current 12. That would be an answer of how to make sure you get the funds. But if he needs to rehire someone, then he would just use the funds to pay for that person.
Yeah, so he can just roll, he can just go back and dive into when his payroll was a little higher and use that.
Yep.
Okay, and then one other question came through from Richard Glosky. What happens if the employee leaves after getting the PPP loan?
So if you need to replace the person, then go ahead and replace them, because they're doing it based on head count. You know, the FTEs that Caroline talked about earlier, they're not doing it on a specific person. They're not going to say, hey, you let this person go. It's going to be more like, what's your number, your head count number, and then those 2 time periods that she explained in the denominator, that you'll have the choice of what to use as your comparison time period.
I have something to ask on top of that real quick. From when we applied for our PPP, they didn't take my current head count. They took the average of the last 12 months. So is that how they're basing it on, or are they looking at your starting head count for the PPP?
I have a feeling when it gets to the bank, when the bank is going to start working with you to get your records, they're going to get very specific on this number, and they're not going to just let you give it your best guess. So I understand that you may have used the average number, the FTE number over that 12-month period. We actually did the same because we've been in a growth period, so that made more sense than to use our head count at the day of the, when we applied for the loan. But when it comes time for the forgiveness part, I guarantee your bank will be very, very specific on what numbers they want you to use. And I think you could probably give a good case for, like in our situation, it was the average number makes more sense in our situation. That might not make sense in everybody's situation, especially if you had been on a downward curve or, a downward trend versus an upward trend. I don't know. I think that will be more like a case by case basis for you to work out with your bank.
Okay, we did get a lot of questions coming through regarding the unemployment rate going up, and I don't know, maybe I wasn't listening when that was addressed. So the unemployment rate is not going up, am I correct there?
In theory, that's what the state agencies are saying, but are they going to then at the end of the year when they refigure unemployment rates change everybody's across the board? I think that's possible because the money has to come from somewhere. So in Texas, for example, we have, I forget if it's 5 different levels. The lowest level is if you haven't had any claims, they charge you 2 point something %, up through a bigger percentage if you've had a bunch of claims. I suspect what might happen, based on what a lawyer at TWC said today, I suspect they're going to reset all those rates. And so now maybe the lowest rate might be 2.95 or 3.1 or something like that. But we don't actually know the answer to that. That's all a bunch of speculation. But in theory, if you have a bunch of unemployment claims due to COVID, your rate's not supposed to go up.
Okay, good. One came through from Anthony Atanzio, and this could be from any of the panelists here. The question is for the panel: because the government's giving the 600 per week and a few staff are making more money on unemployment, then what they made working, it created a problem with our staff that are still working. What are some companies doing to reward the employees that have continued to work? So any of you guys had any thoughts or want to give any suggestions on that situation?
I've seen some retention bonus type situations where people are paying retention bonuses. I've seen some higher hourly wages during this time period. That's about all I've seen though.
Okay. All right. Anybody else want to weigh in on that one? As far as people wanting to stay at work, I know I've got a lot. Corrine, yeah, put your hand up. Unmute.
I was going to say we're having that same discussion, in our company. Management is talking about that, and we have probably a third of our employees who have not requested any time off or asked for any sick leave or complained about anything. They've just shown up every day like troopers, and we were thinking about maybe giving them an extra week of leave or something when all this dust settles, doing something for them that makes them feel like it was rewarded, their time and effort was rewarded.
Yeah,
I feel like we need to do something.
That's very, very wise. Yeah, an extra week of leave would go a long way, I think, especially, some of the stress that the people still working are under. I know it's getting bad out there. Heather, did I miss any questions? Were there any more that I didn't dig up?
I don't think so. Did you get the ones on the Q&A as well as the chat? The QA.
Yeah,
I think you.
I did the QA first. Oh, there was one more from Scott Klintworth. He has an SBA loan. My bank has stopped my auto draft. The SBA is making the payments. Will I have to pay this back? Unmute, Sara.
I don't want to misguide you. I don't know the specific answer to that. I don't want to lead you astray.
Okay, so I'm going to just say, Scott, yes, you've got to pay that back. And I'll give you my bank account number when you're ready. Okay, well, I saw Sarah Brown added the link for the meeting, the virtual happy hour next Tuesday. So thanks for that, Sarah. And I'll turn it back over to Heather. This is her shindig. Thank you very much for putting it on, and thank you for all the participants. It's been very informative, and I'm hoping that the people out there got a little more clarity as to how we handle these.
Yes, thank you so much, Scott, for all of your help. Thank you to all of the panelists, our guest speakers. You were very helpful, very informative, and I think you did a great job answering a lot of these tough questions that keep circling around, and we keep hearing rumors, but no one really knows the answers to. And I guess it's just an evolving conversation that we'll continue to have over the next few weeks, few months, who knows. But thank you everyone for joining. And if you want to be a panelist on our future webinar, please let me know. If you have topics you'd like to discuss, reach out, heather@dyerapplianceacademy.com. Caroline Harrison has offered to share her PowerPoint. It'll be up on our website later today, and feel free to reach out if you need anything. Thank you. Thanks, everyone.
Thank you.
Bye, everybody.
Thanks. Bye, guys.
Thank you.